Hey everybody, good afternoon. How's it going? Channel member Amy, channel member Rob, channel member Brian, channel member Ted, channel member Rex, channel member Dan. Welcome to the show. We have 30 of May, right on schedule, 5 p.m. on Tuesday. 30 minutes of awesome. Welcome everybody else. Craig, Tara, Andre, Scam Likely, hanging up on them. And Ray, Stephen, Kay, Tara, and Andre. Good to see you, Ray. Wrongimer. Just sent you a couple funny things. Anyway, Frank, good to see you. And we have today in store this week CPI coming up on Thursday, PPI coming up on Friday. That's Consumer Price Index and the Producer Price Index, both coming up later this week. And if you want to chat with me and be able to make requests, you're going to have to be a subscriber on the channel. Click the link right here, right over here in the corner, and be a subscriber on the channel. A few seconds later, you could chat on the stream. Hey, Infinity, good to see you as always. And welcome to the stream, everybody. So we'll go through CPI, PPI, a little bit of market update, and then we'll take 30 minutes. Your request, at least 30 minutes. Lately, it's been lasting like an hour. So anyway, let's jump into it, shall we? All right. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. That means, well, while I may predict something might come true in the market, and sometimes I get lucky, I may never get another prediction right again. You may not either. This presentation intended to be informational, educational, fun, and entertaining. It's not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. Please see the first sentence. All trading involves a substantial risk of loss. And if you desire personal financial advice, you got to consult a financial advisor. That's somebody that has the certification to tell you what to do with your money. That's not me. I don't profess to be any better than you are. I mean, let's face it. I'm just a guy. I take care of my money, take care of my family, and hopefully that's your goals, to take care of your money and your family also. But nobody's going to watch out for you for number one. So you got to make effort and you got to try. So what's on tap? We've got the CPI coming up on Thursday. We got the PPI coming up on Friday. And just jump over and look at the day here. Today, what a day. We just kind of chopped around, right? I mean, that's kind of what it seemed like. Drifting a little higher, just taking back yesterday, not really breaking out and running much, although we did pretty much immediately hit the target that I called for this morning. I was like, hey, we'll probably go up to here, we'll bounce back. We'll talk about it here in a second. Anyway, like I said, we've got some meeting minutes for the FOMC coming out tomorrow. I don't expect a lot of fireworks, but that will kind of confirm the results from the FOMC that we had just a few weeks back, right there. We'll see if they're a little more dovish or a little more hawkish than just the half-point cut, and kind of get a feeling for what they were thinking. That's really what tomorrow brings. And we've had Fed members galore out speaking. I mean, look at all these Fed members speaking. Starting at 8 o'clock in the morning, and then 9 in the morning. Then we've got this one at 10:30, this one at 12:30, this one at 5, this one at 6, after the market closes. And then Thursday, we get the big show right here. These are the ones to be prepared for this week. Are we going to get hot inflation coming in? Are we going to get it down to the estimated 2.3% that they're calling for? I don't know. It's the last one we get before the election. We'll see. Which way does it go? And then coming on up here on Friday, 8:30, we get the PPI. This one hasn't been as big a market mover, but it still does indicate, like, if this starts spiking, if we start seeing some unexpected pops here in the 0.3% range, 0.4, 0.5, if we see something show up here, it's going to show up here, 3 to 6 months before it shows up in CPI. That's just the rough 3 to 6 months. Usually, typical 6 months, but 3 to 6 months it front runs CPI. So if we get a pop here, we'll probably see it. This will indicate CPI is going to go nuts again. Yeah, we started seeing that popping, those 0.5 reads we were getting there. And we saw that one before COVID. Then we saw the negative, then it back to 0.5. And all was fine. And then we got this rocking high 1.1 out of nowhere. And then inflation took off from there. And then they had to start cutting rates in 22. And we went into the abyss. That was October of 22. We've been kind of on this recovery. But if we see another pop over here to 0.5, it's indicative prices are going to keep going up and show up in that CPI. And we've already got, here was the dip. If we're running 6 months ahead on CPI, that means these right here, these 0.5s may start showing up in the CPI. So keep it in mind as we move forward. I talked a bunch about CPI this morning. If you missed that, you got to watch it after we're done here. Anyway, hey, Kimberly, my favorite subscriber of all time, right there in the chat. And all right, so jumping into, let's go with the red list and jump down. Let's talk about S&P 500 futures. And let's just go to a clean chart and just kind of talk frankly here about where we are. And we got the red list. Let's go to ES and just clear it off. I'll keep my other drawings on the other chart so we can talk about them in the morning. Here's where we are. We did the roadmap bounce right here. And if you're new here, this is first time, I love this pattern. This is my number one highest probability pattern. When we closed above this 618 after hitting that roadmap line right there on the daily chart, which was right here. Here's the first daily close. That was the entry right there. And the high probability target was right there. All right. We got there and haven't been above it. We came up from here to here. Took us that long to get there. And we have not busted through. Just been consolidating, grinding on that target. We did touch above it right there. Right there. We hit the target. What do we expect next? What's the primary expectation after we hit the target? Retrace to the roadmap line. Primary expectation. Now, that's just one chart. Now, looking at the bigger, broader market, here's what we got. NQ. This is the biggest, the 100 biggest, bestest companies out there, right? That's what Nasdaq's generally, the last like 14, 15 years, it's only been down 1 year. Whereas S&P, more like 70% positive, 30% negative. So we've got this high, same roadmap bounce right here. Move up, same trigger entry right there. Little less strong, but it was a close above the 618 level right there. The target is up here. Noticeably absent a hit of that target area. Noticeably absent. Right here. We have not hit that target area right here. Right? Haven't hit it. So, there's no scenario that I foresee where this goes on to hit that high probability target. And S&P, which is ES, that the futures for S&P 500 are ES. There's no scenario where this goes on to hit that target and doesn't take ES to extension targets higher. So, even though the primary expectation would be a retrace back to the roadmap line here, in reality, we're probably going to go on to reach extensions up here, these extension targets, while NQ goes on to hit its primary target. Right there. NQ being the Nasdaq 100. You could also look at NDX and SPX, but those are cash indexes and they stop trading. All right, they stop trading at 4 o'clock, start trading again at 9:30. And for the whole picture, I use the futures charts. So right there, we're holding right at that resistance point. Call it magic if you want. I mean, I said it was going there. It went there, and we're sitting there. NQ is taking a bit longer than I would expect. Semiconductors working through some stuff. And it did do a secondary bounce, but that doesn't, I mean, things do secondary bounces all the time. We can pull up a million examples of that. Doesn't make any higher or lower probability to work out. We see secondary bounce all the time, but it's not a statistically significant event. All right. Now, what is statistically significant, or what I find significant in this secondary bounce, the other pattern I like to look at, and we'll just turn off everything else here for a second. I love this pattern right here because it's usually a powerful pattern. Now, what we've got a move down. This was a trend. We trended down from mid-July into August, into that August low, right? We bounced up, and off of this bounce, we retraced to a 618 level. All right, you notice the 618 was the trigger for the high probability to trade up off the roadmap line. This is a support level here, and now we've moved up off that low. We broke above this high. What this is set up is what I call a measured bounce. This is the other pattern that I love and that we're going to look for today. Now, the target for a measured bounce done a little different. All right, instead of what I had up here a second ago, this particular setup that is set up with this double bounce off the roadmap line, as Rob called it out, this set up a somewhat higher probability, higher than 50-50, but you know, these aren't as reliable as the measured bounce. We set up this potential to rally on up here into this zone right here, which is higher, you know, generally higher, not a lot higher, but higher than the high probability target. You know, see the low range here, but this mid spot right up here, this becomes the higher probability where these two kind of come together, that confluence right there. So we'll probably see an outperformance as this pops, and it could go even all the way up to here, to these up here. It's not the highest probability expectation, but I do kind of expect this to hit right here. Find some resistance coming up in here. So that's big picture. That's kind of what I'm expecting right now. This, funny enough, if we look at it, it could play out right into the US election coming up right over here. All right, this could play out right up into there. Then what do we get? If that's a major resistance, we can see this on the election. That's a possibility right there. Entirely possible right here. All right, just want to lay out the next couple of weeks. I was talking about the seasonality of the election this morning. If you missed that talk, go check it out right here. This is what we're looking at. This is a high probability pattern. Not even looking at, you know, it just happens to be what's cooking in the charts right here. All right. It just, election day could result in a large pullback. And what happens right after the election? What's like the day after the election? Anybody know? Anybody remember? FOMC meeting starts and ends on Thursday after the election. Set an alarm on your phone. This one, it may not be the election that causes the drop or is the reason for the drop. I mean, maybe it is. Maybe that's one piece. Maybe it's a 1-2 punch, 1-2 gut punch. Wednesday, we start down. Thursday, we get the FOMC and accelerate down. Flush the toilet. Heard it here first. Heard it here first, folks. Trying to think of some smart aleck way to say it, but yeah, heard it here first, right? We may get the pullback right there. That's Thursday, November 7th. So the election's Tuesday. They start the meeting Wednesday. Thursday, we get the announcement. Right there. Watch out. I'm not going into that without some downside protection. I'm just not. And I'll probably buy it out in January or February. So, yeah, what if the rate stays the same? What, there's a lot of what ifs. What if CPI comes in hot tomorrow? They decide that a half point was too big. What if CPI comes ripping back? Half point cut was too big, and we gotta raise the rate a quarter point. Wouldn't that be a shocker? Ease it back up. Oh, we went a little too aggressive. Let's ease that back up. Watch out for that right there. Dun 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 dun. We'll see what happens. I mean, the mortgage rates spiked. I was talking about that on Friday with the jobs, the giant. It's all the federal government hiring people, but hey, the giant pop in jobs. Mortgage rates made the biggest single day jump. 0.27%. 0.27%. Mortgage rates do not move by quarter point moves in one day. On Friday, they did that. So, dangerous stuff out here. If I could spell mortgage. And M-O-R-T, G-A-G, 30, US right here. Switch to the weekly chart. It's not, hadn't updated yet. So, still on the 30th, but this jumped up to 6.5. We went from down here up here. Look what this is. That's a roadmap bounce, right? If we break back above here, target's a new high. Might be up at 8% on mortgages. Just saying. Right there she is. There's the target. If we bust above, if we turn down, we go down. So that's the key level right there. Dun, 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 dun. Yeah. If we start ripping higher again, be careful out there. All right. So that's Nasdaq. Right? That's big tech and S&P. Russell, a little different story here. Let's just clean this baby up on the right chart. Yep. All right. Here's what we got. Here was the high. Here's the all-time high. Not so different from S&P and Nasdaq. We made a high back there. The big difference here, though, S&P and Nasdaq have now made new higher highs over here. This coming across here is up here. We are not above that on Russell. Now, a lot of people don't think about it, but there's a lot of companies in the Russell 2000, right? 2000, it's actually like 1,800 companies or 1,900 companies, but they call it the Russell 2000. This is small to some, pretty much small cap companies, some smaller mid-cap companies are still in here. These companies right here employ the vast majority, like 85% of Americans work for these companies right here. All right, because there's just so darn many of them. And companies aren't, when you hear that headline like, oh, everything's great, the S&P's at all-time highs, the Nasdaq's at all-time highs, and blah, 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 blah. And then, you hear everybody talking about struggling. Well, here's 85% of Americans working at these companies, and their company is not doing all-time high stuff. And in fact, outside of the Magnificent Six or so, there's not very many companies making just rocking it with all-time highs. Even a bunch of the Magnificent Seven haven't really hit all-time highs. So that's what where Russell kind of leaves us here. If you want the market roadmap line, link is in the description. It's like $5. You get started. You can come join my community right there. And so that's what we've got. We're sitting here at the consolidation point. We've pushed through that 618. So yeah, we did kind of set up the high probability it will go up to 25.93. But big caveat, big asterisk on this. We're still sitting here at that where we struggled on the way down and struggled before we popped. We still have this like resistance right there. We built it up before we popped it to the all-time high, and we're struggling to get through it now. This can result in a big retrace that goes on down further. That further extension can take us all the way down in this zone, right down in here. We start breaking below the roadmap line. This can be a big flush out. So, yeah. Hey, I'm just trying to, like, where can you be wrong? All right, where can you be wrong? I'm just trying to lay it out here. Like, there's some warning signs in the market. S&P and Nasdaq, probably going higher. After that, we've got to resolve the fact that Russell's been lagging. All right, I'm not sure it's going to catch up. Like, there's this move off the low right here. Like, this low right here. This move up, not bullish. Right? It's kind of overlapping and nasty. Indicative of being in a correction. Corrections, this was all corrective. This was all corrective. This is all corrective type price action when you really dive down into the lower time frames. And how does that resolve? It resolves by doing a flush to a lower low right there. So I'm not trying to say like sell everything. I'm just saying you got to be freaking careful out there. All right? You just got to be freaking careful. Just got to be careful. All right? Wrong, we're finally responding. All right. Oil. I was talking about oil this morning and kind of drew a scenario earlier that we may pop it and retrace. But look what we did. We kind of came down here under the roadmap line. I was hopeful that we would hold on to the more bullish support and pop it on up here. Maybe setting the stage for the challenger to win. But at this point, let's jump back over to this chart really quickly where I've got the other stuff drawn. Dun, 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 dun. This level I have highlighted is an important level. Very important level. Now, we moved up, we retraced, we popped up, we hit a key 1618 extension, retracing here today, all in one candle. Pretty wild pullback on oil today. Right there, one big move. As long as we hold above this number right here, as I said this morning, 72.31, as long as we can hold above that, even we could withstand one little dip in there tomorrow, but or the next, in the coming days, we could sustain one little dip in here, but it cannot make any kind of sustained move back below this high over here. Otherwise, it wrecks the bullish potential. This may go down. If we break lower lows and keep down here, stay down here into the election, the incumbent team wins. Probably going to be the incumbent team. Simple as that. So there's your line in the sand right now. Below 72.31 probably means we're going on down. Probably means the incumbent wins. Right there. Right there. Brent. Heck of a retrace on Brent. The level for Brent, we've got to stay above this level right there to maintain the bullish stance on Brent. And CL has been a little more loose on the patterns compared to Brent. So Brent is really the more important chart right here. And we got to stay above 75, this 75.20-ish area right here. One little dip, okay. Any kind of sustained close down here, not okay at all. Not okay. And minor overlap, okay on futures, not okay on equity charts. But so that's Elliott wave theory type stuff right there. Yeah. So yeah, that's the primary prediction I've been rolling with. Mr. Williams, William Adams, sorry. Primary kind of thing here. The big bold prediction on oil. If we break up here, the challenger wins. If we are down here into next month, first Tuesday, that's what, 28 days away now. If we're down here, incumbent wins. If we're up here, challenger wins. If we're in here, it's a coin flip and oil doesn't matter for the election. So in here, in this zone, right in here, coin flip zone. Up here, challenger wins. Down here, incumbent wins. Anywhere kind of in this zone, coin flip and oil doesn't really matter. And I mean, I'm welcome to be wrong. I might be wrong. We could pop and the incumbent win. We could drop and the challenger win. I kind of view it as simple as that right there. Now, the other statistic has been that 87.5% of the time that we are up the 3 months rolling into the election, which at this point, go look at the ES, flip it to monthly chart. Simple as that. Green, 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 green. I mean, look, that's a lot of greens, right? Rolling into the election. This is a muckier chart with a lot more stuff. We could go over a cleaner chart. Flip up to the monthly. So far we got a red, but green, green, green. If this one closes green, that's green into the election. That's 3 months, right? We've got 4 months, 5 months into the election. 87.5% of the time when we have a green run into the election, the incumbent team wins. The incumbent team maintains control of the White House. Fascinating statistic, I think. Right now, the stage is set for that. So 87.5% of the time, that's maintained right there. Now, correlation and causation. 100% of people that have confused correlation and causation have died. Think about that for a second. Of course, 100% of people that didn't confuse them died too. So correlation and causation. Correlation is not causation. Causation is not correlation. Now, what is correlated to the stock market is... What is correlated? Is global liquidity. Right? That's 98.9% correlated to the stock market. Global liquidity. There's just not a great way to chart global liquidity. That's the big problem. I downloaded a Python code and it was like, oh, you don't have access to all these numbers that it requires to calculate. I was like, mother fudger. Thanks for the free code. Doesn't do a dang bit of good if you don't have access to the data. Anyway, so looking at gasoline prices, made a little rally off the lows here, and it looks a lot like the oil charts. Except we didn't quite get up here. We look at Brent, we're up here. Look at CL, we're up here. We look at gasoline, consolidating lower. Under the roadmap line, this is still bearish. And it hit the corrective resistance and pulled back. So this is indicative that we may see yet another lower low on gasoline right down here. Heating oil, diesel fuel, did manage to just barely touch the roadmap line right there. But that's still bearish. So what to watch out for on heating oil is a retrace. Said that funny. The support level right here, right where we consolidated, funny enough. This level wasn't here before we popped that right there, but look where we consolidated on the way up. It's kind of funny. Anyway, there's the support. We hold that. Positive, break it. Probably coming down in this zone right there. Natural gas. Still on the path. That's still the target. At 396. When we broke above the roadmap line back here, in fact, before we broke above the roadmap line here, I said that this was likely the target. Why is that likely the target? Comes back to one of those first two patterns I talked about. This one happens to be the move up, the retrace to the 618, and that continuation up to there. And we may get all the way up in here. But let's play it conservative here. Talking about 396, $4 area first. Let's be conservative on the target. Gold doing a little bit of, it felt like a wicked pullback today, but just flash down and just get a little. We broke out of the bottom of the box, so we may retest that prior small consolidation box. I only had 4 days right there. We may come back to that. If we don't hold that, likely, very, very likely, we're coming back to this one right there as the next line. And if things accelerate a little bit, we could come all the way back down to the roadmap line on the daily chart. If things get a little spicy on the downside, which is where we consolidated with this bigger range right back there. Went up, had an extension target. That can result in coming all the way back down. Now, it's been a while since we've been to the roadmap line on gold, like back in February. So it's been on a tear. Might be due a little resty. Might be due. Silver got a little bit of a, that was a rough one today. But, rough one, but the good news, we held into the close, the 50% retrace right there. I want to see this hold this area right here. This is a nested potential move up right here. This is almost a measured bounce. Meets the minimum qualifications, hitting the 50% right there today. Minimum qualifications. I'd more ideally like to see it hit that 618 just a little bit lower at 30. But I kind of want it to hold that, not be testing, going any deeper. All right, I just want to hold that area right where we are and bounce right up here. 40, really looking good on the next move higher, on the next breakout. If we do, I mean, we don't have to. We could just break down and go on a deeper retrace. But if we break out, 40 looking really good for that next target. I've been talking 40 for a long time. I've been talking 35 for a long time. 40 kind of firming up even better right there with that pullback today. Looking pretty good. Pretty good and pretty spicy right there. And that can happen pretty fast. Dun, 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 dun. Copper turned down right at the resistance. Imagine that. Holy moly. You might think I knew what I was doing. Hopefully people heeded my warning when I was talking about copper may find resistance and turn down. So next support is right here at the roadmap line. Right there is the support for this. I know several of you are long to death copper. Please, please, please. It is not being wrong that costs you money. It is staying wrong. Do not stay long copper in the face of breaking below this support, because we are likely going on a deeper correction this time. If we break that support, we're probably going lower low than we were right back here. in May, or maybe that's June of 22, the summer of 22, we are highly likely to come all the way down here. Please don't stay long copper into that plummet into the abyss. All right. Yeah, that copper can hang out here. ES makes its higher high. NQ makes its higher high. Russell farts around, and then everything flushes after the election. Be careful. Be careful. I don't think it matters who wins. We're probably doing this. Doesn't matter who wins. The writing's already on the charts. As Sledge would say, you know, it's already in the charts that we're probably doing a big correction. Doesn't matter who wins. The incumbents, the challengers, doesn't matter. We're probably doing a big correction. Now, I don't know if it starts November, December, January, February, March. The timing of it's a little fuzzy. We could do a mega blow off top that takes us well into maybe even Q2 of next year. That's why I'm not saying sell everything right now. Just there was a warning sign that we could top out. There's the possibility, the potential to top out right into November. And that may just result in a retrace to the roadmap line. And then we go popping off again. All right. Then we reach the ultimate high. Maybe Q1, maybe Q2, possibly Q3 next year. And then we start down in the bigger way. If you're not prepared for it, you don't know how to trade for it. So these scenarios got to be out there for you to be able to trade for it. All right. So that's kind of the main run through everything. Hit Bitcoin. Because, well, it just keeps being frustrating. Let's just clear a few things off of here. Off my simplistic chart. So here's what we got. We got halving that happened back here. We've got this high that occurred after the ETFs came on the market. We've got a lower high, 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 and a lower high. That one didn't even touch the trend line. We've got this move up, and we're just sitting here. Right now, that's my primary expectation for now. All things being equal, just looking at the chart, not anything else. That's kind of what I expect. Just sideways for now. All right. It's not overly bullish. It's not overly bearish. Now, diving in a little deeper, we retraced almost down to a measured bounce, but didn't quite get there. Didn't quite get there. This one back here did get there. In fact, went a little too deep. Pushed the limits. So not as awesome as it could have been if it had just held the 618. Went a little deep, got to the 786. So this causes a little bit of heartburn. Right now, the next push out, if we can get through that prior high, I would expect this number right here. Now, we're in the zone right here from now until U.S. Thanksgiving. We're in the zone to start the next run. Typically, 220 days post-halving. The reason halving is important and it's on there. 220 days after halving is the average for the last four halvings. Or three halvings, four halvings. We just had the fourth halving. So three prior halvings. It's about 220 days after that when the rally really got going. That's in December. So it should start moving at about 180 days, which is right around Thanksgiving here, and be well on its way into 220 days. So bottoming out anytime in here. This may be the bottom. This may be the bottom. You know, these may have been the bottom. We're just working through some stuff. Then we actually get the breakout over the coming weeks. Holding the roadmap line here is bullish, but not making a new higher high is not bullish. So do the pros and the cons, the bulls and the bears. It's kind of a coin flip and uncertainty. Now, the thing that's not supporting us here that we need to get above the roadmap line is this one. And this one, still maintaining this like watermelon seed squeeze thing. You may see this finish up in here. I would love to see this make one more lower low right here. This resolves this whole pattern here that's nasty off of this high from back here in February. It's been down, 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 and we need one more lower low. Excuse me. Almost blew y'all out with the sneeze, but I held it in. I think I see stars now, but there we go. Blood pressure's probably sky high. Need that one more little flush right down in there. All right. Now, it's that time of the day where I take requests. So I need you to give me a complete ticker and capitals, one per person per request. You got to wait for somebody else to go before you give me a second request. And if you don't follow those rules, very basic, simple rules, I'll probably skip your request. If you need some sort of spin on your request, please write in full, complete sentences and spell it out for me. And if I skip something or miss something, please use complete sentences and tell me what I skipped or missed. Take it easy on me. The chat will go faster than I am able to. So, all right. Moving on. PayPal, PWay, PP, PYPL. So let's just jump over to the main charts so I have the record of it. And, well, actually, we'll just draw on this chart. We'll just draw on this chart because we do every week. So what we've got here, what we have done, it's basically made a roadmap bounce. And we're into the 3-day roadmap line. Now, the crux of the issue here, when we look at this time frame, moved up, we retraced, and we're reaching a major resistance here. Major resistance. Now, this will be the key point. If we can rally on up and break that level, we need to hit this 99 level here on this chart. Rally up here, retrace, hold that 3-day roadmap line, and get out of here. That needs to be what happens, and stay above that right there. Similar to the oil chart, we need to finish the rest of this pattern here. Now, you may be like, why did you jump up to the 3-day? Because it illustrates my point. All right, the daily chart here, a little less clear. We did a retrace, we did the extension. If we do the roadmap bounce situation, which it's kind of muddy because it was just kind of smearing up all over the roadmap line, we reached the 1618, but we need some further confirmation here. Now, this was a 3-wave up and a 3-wave down. And then we've got kind of sort of a 5-wave up, which 1, 2, 3 leads us into a potential to make a lower low. That's why this one's kind of on my cautionary list at the moment. We could, in fact, retrace back to the roadmap line, break below it, and make a lower low. But we could also bounce off the roadmap line and make a higher high. Or we could do the extension now to the more ideal 3-day upside target up in here around 98, 99. And if we do that, it starts tipping the odds that we're done with this stuff and we can kind of take this potential off the chart right here. Just nix that off the chart. So that's what we need PayPal to do. Now, looking to the left over here, you can see right now we're just kind of breaking a little higher than that high. We have another high right there, and we have another high right there. Funny enough, those high, these levels over here weren't going to line up with these until we did this right here. So it's all kind of weird, right? Like this projection, these levels come from a projection of this move right here off of this level right here with the extensions, the 1272 extension, the 1618 extension. So that right there projected off of this low with those extensions on it just happens to line up with that high and that high. Weird coincidence. And people say Fibonacci doesn't work. Well, if you do it right, it does. So major resistance here, major resistance here at those prior highs. If we can get through it, PayPal's looking pretty good to going higher, maybe back to all-time highs. Right now, we're still working through the correction. We've got a long way to go. Long way to go. All right. Dun, 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 MCK. Hey, who wants to do a giveaway? Anybody want to do a giveaway? Pause right here real quick. Anybody want to do a giveaway? Oh, I learned about a giveaway today. I want to see if I can do it. See if I can do it. Yeah, I got one yes. It won't, it'll be for non-channel members. Let's see if I can do it. Let's see. How do I get to it? I learned this today, and I did a group coaching session, and let's see if I can open this up. Hopefully it doesn't blast out on the microphone. Let's see, I have to skip ads. There we go. And let's see what I can do. There we go. Not the right button. Let's see. Oh, I can't do it. Am I logged in the right person? I'm gonna have to ask the dude who told me he could do it. I don't see how you can do it. He was like, oh, you just click this button and you can do a giveaway. I can't do it. The button's not there. Let's see. Well, that's not what I want to do. And oh, that's not what I want to do. Or how you do it. Oh well. I'll learn how to do it. I'll do it maybe next week. Probably next week. Or maybe later in the week. So I'll do it keep coming back. I'll do it one of these. I'll do the giveaway when I learn how to do it. Apparently the button they said was there, I don't see it. So I don't know if I have to click something somewhere else or I'm in the wrong place to do it. Dun, dun, dun. Let's see. Nope, that's not the right button. And yeah. Dang, that's goofy. They were like, oh, you just click here and here. And I was like, oh, cool. And those buttons aren't on mine. So apparently that's a YouTube thing, not a... Oh, well. Oh, well. Sorry to get everybody excited. Just didn't work. All right. Back to it. I'll do a giveaway. We'll do it. All right. Rolling back up. And MCK. So we've pulled back. We're below the roadmap line. This indicates we may go on down. Right here. We're not holding any kind of support. So resistance for going higher. The roadmap line as it comes on over. Right there. And watch out below. Like, how far down could we go? Oh, baby. Ooh, baby. This one could go pretty far down. Next support right down in here. Around that 425 area. Maybe we hold the 50%, but looks like we might go on down. Baidu, of course. I have a bigger target on this, but we hit resistance today. I've been warning about China. Their 5 trillion won stimulus maybe played out for now. We need some retraces. This is just one giant pop off the lows. We need to come back, hit some roadmap lines before we and build some support that we can move up off of. Right now, we don't have that cooking in these charts. We just have this move up, this initial move up, this deep retrace, a potential to go on up here, but we don't have that continuation likelihood with just one pop off the lows. We need to see some retrace back into some support and then get some continuation through. I need to see that on, you name it, China. I went through a dozen charts today on China pulling back. They've kind of been on the morning monster every day lately because they've been moving so big. So bud, right here, I do still have a call. I had a synthetic position and I liquidated off some of it because of the margin that was being eaten up with it. We've moved up, we've retraced, and I clicked the wrong fib tool. That was cool. So we've done this big move up. That one right there. Held that measured bounce. Then we did this move up. And we did this retrace and a measured bounce. And then we did this move up and a retrace into a measured bounce. So it's just 3 measured bounces piled together. Big time frame, big picture. Months, weeks, possibly years-long pattern. Probably going to take us right up in here. That's a double from where we are, if you can afford to stay on that long. Now, shares, viable option. Options, I don't know. It's going to be tough to hold on that long. But there's your target. That's measured bounce, measured bounce, measured bounce, wind up. That's 3 in a row, higher lows each time. Looks really good. It's a heck of a wind up. If it fails, it's going to be really disappointing. It's got a good setup. I am long some calls. I don't know if my calls are going to run out of time before we actually get the big move or not. We'll see. We'll see. Been long since back here. I don't even remember where I got long. Was it? I got long in March or May. I think I got long last year in May on the second measured bounce here. Or, somewhere. I think it was that one. Maybe it was the one before. I don't know. I've been sitting and waiting for a long time on this one. Long time. I just want to see it get going, but so far, not doing it. Significant resistance right there at that high, and that high, and that high, and that high. If we can bust through it, highly likely we're going to rapidly accelerate higher, but just not doing it so far. All right. RYCEY. Well, that's the thing about the financial markets. You know, a lot of people follow politics, and it's hard to ignore all the macro environmental environment, even if I don't really think it matters in the big picture. So this thing is above the 618 on this giant pullback here. Looks like we might be headed to 21. Now, there's a caveat that comes with this. This is, quote unquote, low priced stuff. It's an equity under 10 bucks. That low price stuff doesn't follow over to crypto, but it does in equities, and this may not follow this pattern. It may fail. So, no guarantees here. That's what it looks like it might do. That's one big move up off the low with no retrace, so we may have to get a 618 retrace before we can do that. Right there. Would I be betting on it big? Not really. Florida. What's the prediction for Florida? Hurricane. Foot Locker has moved up, retraced, and measured bounce, right? And delete. This move up, and we went a little deep on this one. This could, if we break back below this low right there, we may wreck this setup and go lower low. We've got the potential, as was it the Oracle says on the Matrix? You've got the potential, kid, but just not ready yet. Just not ready yet. So if we break down back below that low, does this do like Budweiser and we just consolidate again? I mean, like Bud right here. It touched and then touched again. Right? We moved up, we even made a higher high. So that one, it's tough. You know, we look at Foot Locker. We moved up, didn't make a higher high, but we're back down here. If we break down below that, probably going to make a lower low. Probably. And that lower low could be down at 13. So that's what we get. All right. FE. There's the potential place we're going right there. AMD. So big picture, this one hasn't changed for months and months and months. We rallied up in a 5-way fashion, hit the top. 1, 2, possibly 3 down, but we didn't hit the ideal support. We came up shy. We moved up, and we're still underneath the roadmap line. So here's the deal. Here's the deal. This was the first move down. This was a 3-wave up. This is another move down, but it's just one move. This is a 3-wave up. Continuation down, 3-wave up, and continuation down could take us down to this area right here. That would be the ideal support zone for AMD. Now, that sneeze finally making my sinus swell. So here's the flip side of all that. There was the high. There's the resistance right there. I've got to turn this tool off and move the fib line over to that low. Even off of this low, that resistance is still in the same spot. But odds are, if we break higher than that high right there, we're probably going right up here into these targets, 248, possibly 268, right there. Probably coming right up there. So that's the long and the short of it right there. This is a major key resistance. If we break through it, up. If we bounce off of it, down. That's what we got. That's what we got. That's the simplest vision on AMD right now. ATGE. Probably coming back to the roadmap line right there. And next up, I mean, that's just easy peasy on that one. WM. Sitting on the roadmap line. There's the resistance. Breakthrough. 228. If we don't, more of that is what I would expect. There's the roadmap line. And just humming along. Until we can either break up or we get down here and go on a deeper correction. How deep would that correction be? The potential downside is that high, that low, that 618, right down there around 186. Right down here or right up here. But the primary expectation is sideways. Hanging in there. All right. That's WM, AVGO, not much change there either. Target still 194. We broke through the resistance, so 194. Just a matter of how long. Does it take another week? Take another 2 weeks, 3 weeks? I don't know. Likely to get up there though, and it could retrace. It entirely could do this before it does that. Similar to the way Amazon's moving. Came up here, retraced. Have not gotten up there yet. We came up shy, breaking out, retraced back down in here. We might touch the roadmap line before we can get up there. We set the stage to go up there. We just not singing the song yet. So ALEC. That's a grind into the abyss right there. Don't fight the trend. Zero's a real thing. Stocks can go out of business. Be very careful on things like this. Low price stuff, and the market is back open. That's a real downward cycle there. PKX. POSCO. Moved up into the roadmap line. Retrace and possible extension lower would be my expectation. If we get below the 618 level at 63.79, watch out for that lower low at 54.56 area right there. BBAI. Ooh, that's a gnarly chart right there. Missing the dumpster fire, but that's yeah, I wouldn't trade that. That's low price stuff, and I wouldn't touch it with your money. Doesn't look bullish to me. BWXT. That's at the target. Be careful for retrace. Opportunity is low. Could we extend it? Sure. To 135, 144, 175. Highly likely we are going to stop here at this area and take another trip down. I mean, look, moved up, retraced, 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 moved up, extension, bigger retrace, moved up, retrace, moved up, retrace. It's the nature of it. All right, rotation in and out. And that one looks like we're probably likely due for a retrace. DE. Whew. Choppy. Not a fan of the fact that we have turned down at the resistance. That high right there. Still maintaining a resistance. Come up one move up off the lows. We're going to, just like China stuff I was talking about a minute ago. One move up, probably going to retrace. If we can hold that support there with a higher low, the potential is there to go on up here. I just don't know if we can do it. Don't know. Like if it breaks support though, we're probably flushing on down. This looks very choppy and sideways. Choppy sideways tends to maintain a choppy sideways indefinitely. Bigger correction, failed to break out with 3-wave higher, 1, 2, 3. Higher low. Almost the same high. Almost the same low. Failure to break higher. This probably needs, honestly, hate to do this, but this looks like it looks like we're going to break down and do that without, we'll probably, it looks like we're going to do this before breaking above this. I don't think we're going to do any kind of major extension higher than that orange box before we do this. The thing is, though, it can do more of this way longer than you can stay long or short. SYF. Synchrony Financial. Did the bounce. Did the double bounce. Potential to get the 54 target. Anyways, Rob was asking me before about the double bounce. We see it often. It's not higher probability. It's not anything. Like the trade is, here's the low, here's the high, here's the 618. When we move above the 618, almost 75% likely. Actually, let me pull up the statistics. I did 3,600 tickers, years and years and years of data. Let's go with sheets.google.com. Find my list. One of these charts is not like the others. All right, come on. There it is. Don't usually show this off, but here we go. I'll make this bigger so you can read it. There's the tickers. There's 3,600 tickers. Like if we sum this column up right here, now of course it's not gonna give me the count. We can go down to the bottom. See, like 3,600 tickers right there. Every one of these I back tested. We're talking about 20,000 days of trades. That's a number of years, back to 1968. 14,000 trading days. Okay, that's 20,000 calendar days, 14,000 trading days. Why do I focus on trading days? Because that's what we can trade, all right? Calendar days, trading days, you're like, why are they so different? Holidays, weekends. All right, the candle maker is not open holidays and weekends. Talking about 56,000 trades. I talk about tens of thousands of trades. There's your 56,000 trades. That's an average of 4 trades a day, roughly, across 3,600 tickers. Average percent profitable. There's the real juice right there. 75, like I said, about 75% of the time. 75% of the time when we set up that pattern, it works out. On average, lasts about 43 trading days. All right? That's what we got. That's where my statistics come from. So when we break above that 618, when we get the candle close above that, trigger the entry, typically, across all those other things, 43 trading days, 3,600 tickers. On the daily chart, that's the daily time frame, we get that target right there. That target is 90% of the way to the 1272. 75% of the time. Now, it drops down to 70% of the time, we get the actual 1272. So you lose 5% of your probability in that little gap right there. Now, this up here is like drops to 40% likely. So when I talk about this high probability pattern, that's how many trades I've got backing me since 1968. Now, the shame of it, all trading involves substantial risk of loss, and it may never work again. I think it's going to keep working because it's a very simple pattern. But that right there, that's the target, SYF. Probably more than you bargained for today. FITB, Fifth Third Bank, coming back up. This is a bigger time frame. Move 1, 2, 3 into the low. 1, 2, possible 3. Ooh, man, this is getting in the weeds here a little bit. That's got an extension on it. It's probably going to do a retrace. Don't know how deep of a retrace, but back to the roadmap line would be a primary expectation here. I'm going to have to turn on some other fib levels. Yeah. Back in that zone would be very healthy at this point. And then that finishing move would put it right back to the all-time high. So retrace and extension right there. And that would be played out for now. Off of this low back here. That would be what I expect. And being on a 3-day chart, it may take a little while to do that. All right. Moving on. Roku, please. Hopefully everybody's still with me. Remember, if anything I say or anything is handy, give me a thumbs up in the video. Roku sitting down here at resistance. Boy, when I said that Roku looked very overlapping, I might do a deep retrace. If not, go lower low. People got a little flame on me. Holding that deep retrace, 786, maybe a measured bounce, but that's a little deep for measured bounce. Not my favorite to go deep like that. If it is a measured bounce, click the right tool, that move up, that retrace. That potential is right around in here for that next move. For Roku. NVDA. This chart. We're in the danger zone here. Either we break it on out. We got this last little bit here. Got to break higher than that high. If we could do it, we're going to 148, possibly 166. Or 156, excuse me. 148, 156. Not huge extensions, but there's the first one. There's the second one right there. Could go all the way up to 180. That would be really crazy. And if we just go full on blast out, irrational, run higher, 237. The crazy thing, the real wild thing about all those numbers right there. Every dollar we go higher is $25 billion it takes. $25 billion of money it takes to go $1 higher on NVIDIA. So every $4 and change is basically $100 billion. It's just the law of big numbers. Like this baby sitting up here, and that was 3.2 today. I think that's what I said. 3.26 trillion. So we jumped up here pretty good today. It jumped, made the leap back up in here. To rally on up. It's gonna take a bunch of money. Bunch of money. Let's go back and look. Let's just look. Right here at the close. If we rallied all the way up here, talking 100 points higher. 100 points higher. Grab my calculator. Clear. So every 4 is 100 billion. So that's 25 fours. That's $2.5 trillion. It takes $2.5 trillion for that move. Do you think the market can put 2.5 trillion into something that's 3.2 trillion? Do we have that much money? Can we add the value of Google to NVIDIA? Well, that was crazy. Can we add the value of Google to NVIDIA? I don't know. That's law of big numbers. I think it's going to struggle to get that high, personally. The warning I'll throw out here. I don't see it going that high, that big, that high, but crazy things can happen. The warning. If we roll back just a little bit. Look at this. Looks very similar to the current. We're not quite the same. It's never exactly the same story. This wasn't that long ago. Just in 21. Say, yeah, but there wasn't AI back then. Yeah, there's been all sorts of stuff. Look at that number. 70% retrace. You may be like, well, you know, that was just an isolated case, right? Look back over here. Another similar story. 57% retrace. NVIDIA does 60 to 70% retraces on the regular. Another one right here. It's kind of how this thing operates. Find the low right there. 57% again. So going back to current. What if we did a 57% retrace? Talking about right there. About 50, back in the $50, $60 area. If we did 60%, almost, 67%, that'd be down in the 40s. Be careful. Be careful on that. Think how many billions of dollars that flushes out of the market right there. Does not look very good. I know I put out a video a couple years back hyping that up. This has absolutely wrecked that pattern since then. Absolutely just wrecked it. That's a downtrend, baby. All right. Z for Zillow. My target's still a little higher. Wasn't a fan of turning down right where we did. That's the target, 82. Maybe I should have liquidated when we popped right there, but I didn't. Where might we hold? We're right in the vicinity to bounce. It's an echo of that prior bounce over there. If we do the same move off of the same result, put us up in the ballpark. 74, 75. I may liquidate my option and we get up there. All right. And GM, keep holding, let it go. That's up to you. I'm not a financial advisor. As I said right here, if you desire somebody to tell you what to do, hire and consult somebody to tell you what to do. I give you my expectation. And that's a 52 target because we came up shy of it right there. It already kicked off my algorithm. The problem here, though, it's kind of like a 50-50. And the algorithm kicked off right there, 50-50. Kicked off the entry right there. So it's 50-50. Does it fail? Make the lower low? Or do we pop the target at 52? Coin flip, baby. And that's the same statistic. That's the same pattern, same statistics I was sharing earlier. Whereas across 3,600 tickers, 75% of the time it works. This particular ticker, 50-50. Gotta be careful. All right, POWL. Oh, my stomach making all sorts of crazy noise. Powell Industries. That's kind of funny. POWL. J-Pow. Right at targets, maybe extension up to 286. After that, whoops. After that, I would expect a retrace back down to the roadmap line. Somewhere over here. All right. LH. Ha. Right into the resistance, turning down. This is low price stuff. Take it with a grain of salt. There's support. Breakthrough support. Downside is down here. That was roadmap line resistance. There's the support. Breakdown support. Target $4.60. All right. VKX. V Victor Kilo X-ray. Nope. Victor Kilo X-ray. Yeah, I don't get anything with VKX. OXC. Oxy. Talk about a hype train, baby. For a long time, I said it was going lower low, and people are griping at me. I still think it probably needs a lower low. There's the resistance. And there's the target. Probably still needs one more flush. ADBE is probably going down the toilet. We broke support. There is a bit of support at the gap down, but gap downs don't work the same way gap ups work. There's not like a bunch of people that sold here and waiting for a dip to buy back. It's just not the way dips work. See, they're on pops right here. Think about it a second. People buy. People are buying. People are buying that high right there, right? It takes buyers to make it spike like that. Then it gaps down here. All right, maybe you buy a little more, expecting it to fill the gap. Oh, nope. Maybe you buy a little more, hoping it's going to recover. Nope. Maybe you finally do add. Maybe you haven't added yet. Maybe you do add here. Ooh, looking spicy. We pop back up here. Oh yeah, we're gonna fill the gap, right? Buy more. I'm gonna get my money back. I just want my money back. I want to be back to break even. Get up here, back to break even. Sells off hard because people just want a GTFO. I want to get out. And those people that didn't sell there, when it starts pulling back, they freak the heck out. They don't want to ride it back to the bottom. Oh my gosh. We're going to go back down to the bottom. Sell. So we get to a point here, and we come up, and we do it again, and hit it again, and uh-oh, this time we might actually go back down. And this one might actually result in a lower low. That's what it looks like. So that's Adobe for you. So that's why gap ups not necessarily as important as gap downs. And probably come back here. This is very choppy. And I don't really see a reason to extend, but if we get down there, we could go an extension to 17. That is kind of low priced. It's in the low price neighborhood. VKTX. Missed the T in the VKX. And there's your high. There's your low. Missed the button. There's your high. There's your low. There's the resistance. And 114 will be the target if we get above it. And pharmaceutical is one of those things that doesn't always play. Biotech pharma. Pharmaceutical, biotech, anything that Food and Drug Administration. That's like low price stuff, Food and Drug Administration stuff. Next one is leverage stuff. And the last one is China stuff. China stuff doesn't always follow patterns. So all these pops on China, they don't have to retrace. They may not follow pattern. Charlie Victor Sierra is down here at resistance. Popped up. We have the gap down. All that stuff I just said about gaps. There's a major resistance going higher right there. Might need another flush. That's only 3 waves up off the low. Possibly we get the gap fill. Still in the target zone right down there. 50, 51, maybe even down to 46. All right. And 70 people left on the stream. I'm going to guess you meant INTC, not IINTC. And maybe we found a low, but maybe not. Not enough information to tell. That is a gap down. We do have resistance. Right it back to the gap fill, which is right where the roadmap line is at the moment. UPST. I don't try to pick bottoms. So we gotta make price action that comes off the bottom first. Upstart. We have made the lowest low right there. That high. Did a measured bounce potential, but we're not able to get up off of it yet. Possibly up to 123, maybe 200, but we have lower highs cooking so far. Watch out. Seems to be some significant resistance coming across there. And all right, DKNG. DraftKings turned down at resistance, finding support at the roadmap line. So the long and the short of it is pretty simple at this point. Here is the resistance going higher. Here's the support. Break down. Maybe the possibility we come down to that $25 area. If we break out, potential to come up to this right here, which is 52 right there. 52 on DraftKings. Potential to come up there or down to 25. There's the resistance. There's the support. Pretty tight range. And did AMD, did UPST. Pretty sure I did. Did Mora, or did Oxy Mora. If you're really interested in Mora, you should subscribe to my crypto power plays where I update this in depth. More sideways. Nothing changed since last week. Sideways under the roadmap line. Roadmap line kind of coming down. This support coming across. Sideways. And we're just kind of getting squeezed in here. Boxed in. IONQ. And potential to reverse it here. Here's the low. Here's the high. There's the support. Measured bounce potential. Is it going to fall through? That's a big question. If it does, this would be the target. Right up in here. Oop. Got a little sloppy on that one. Right there. So 44 to 76. Maybe like that's a big range, and it could take a while. It could take us all the way up to like that. Could take out to 26. Could take a while to do it. That's what we got, and it could fail. It doesn't have to do that. The measured bounce is not as high probability. It's more like, it's closer to 50-50. Not, I mean, it's maybe like 60-40 on working out in our favor. Like it's really good, but it's not. It's also not a time constrained pattern. It can take a lot longer to play out than you can stay in the trade. TTD trade desk. It's out at extensions here. Oh, golly. Holy guacamole. Next one up. Next resistance, 122 right there. For TTD. And DJT. Ha. 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 Who remembers me calling for that? Sergio, you here? We did that. I said we were going back to the bottom. Oh my gosh, I can't even believe it. Laura, anybody here that remembers me saying that? I'm just curious. Anybody all remember me saying that? Look at that. Look at that. Lower low. We did it. I don't know where we're going from here, but there's the resistance right there. Resistance here. Possible this goes on down. Mark remembers. Awesome. All right. Back to it. I got a lot. I'm way behind. I've been blabbing too much. TGLS. I'll rip through a bunch here. TGLS. Still in that one. Still higher. My target's up here at 96. I'm still long shares of that one. I bought my shares, what? Right in here, 30. Bought those shares at 30. Here we are at 72. Likely to go to 92. You're gonna be like, why? It's the measured balance, baby. That's what this is. That move up, that retrace, bounce off the 618. There's the target, the 618. We're already at the minimum target. The average target, 77-ish. That may be where I jump off. I'd love to see it on through to 90, though. All right. That's TGLS. Should you buy now? Heck no. You're late. Way late to the trade. That'd be a lot of risk for potentially low upside. PLTR. Wow, look at that. Just ripping. All-time high coming up. 44, 45 area right there. Starting to go exponential, but things can go really exponential. Like this, zoom out just a little bit. This may get crazier. I mean, it may do something like this. If it does, watch out for this and then that. Because that would be the bubble pattern right there. Goes vertical. It's a lot like AMD and SMCI. And then we come back near the bottom. Common pattern. It's not even my chart. You can go Google that. Psychology of market. You can find 900 examples of that chart right there. So PLTR may go on exponential rip. Disney bounced off the roadmap line. That low, that high. Support right here at the 618 and lower low target 82. Right down here. If we bounce, potential resistance up in there. Yeah, right in that. Right in that zone where the gap is. Imagine that. Imagine that. That's Disney for you. Inium. Still the same target. We're just hitting the resistance there. Got a resistance zone to work through. Could retrace back to the roadmap line. That's support right there. Support here. The bigger targets all the way up here. Like 120. 100, 120. How long does it take to get there? Could be 26, 27, 20, 29, 30. You tell me. How long? I don't know. Long time. This is probably going to be on a bullish run for a while. Yum. Retrace to the roadmap line. Still looking for that bounce to take us to the target. We came up shy, like I talked about a couple times already. Back to the roadmap line. Still the expectation, unless we break below the low or get the target. Funny enough, the micro target inside here, we hit right there. We hit that one. See that high, that low, crossed above the 618 right there. We hit it right there. Pachow. And then retraced. So that one in the middle, we already did. Holding this as a measured bounce. Right there, we're right at the 618. I've got an eye on this because I'm long these calls. Looking for that move right there. That move up, that retrace. Target could be even higher up here. 49, possibly even up to 154, 155, 150, 154. somewhere up there. All right, that's Yum. I'm way behind. Invex. Sitting on the roadmap line. No, nothing. Nothing to see here. Snow, still looking for a bottom. Why did you only buy one share? They said. Didn't that look like a bottom? I bought one share right here. Right here. Bought one share here. Sitting on my one share. That does not look like bottoming action right there. That looks like consolidation before we go retest and make a lower low. Not adding to the party until it looks like a reversal. That is not the stuff of reversals at this point for snow. And BA. Potential bottoming. Potential. I've said a lot of things on Boeing. Looks like we actually got the extension lower. Holy moly. Got the extension right to the 1272. So that, look, did the upside down roadmap bounce right there. Like that moved up right into the roadmap line. There was the high right there. So that low right there, that high right there, broke through the 618 right there. Looked like it was going to maybe reverse. Nope, right down to the target. Boom, right there. Boom goes the dynamite. Right to the target. And so we're looking for this to hold. Could it go lower? Sure. 138, possible. Looking for this to hold, though. Break above the roadmap line. Retest the roadmap line. And then get going. That's the thing it's got to do right there. This is what it has to do if we're going higher. This over here. If it does this, who knows? We could go lower low. Could wreck the pattern. We had a potential bullish move off the lows back here at 113. It was potential bullish off the lows back here at 90. Bullish into that move. Deep retrace. Bullish into this move. Didn't make a higher high. Deep retrace. Well, normal retrace right now. Measured bounce potential. Right now. So far. Looks better on a log scale. So far, we're holding at 618. The next move maybe up here to 300, 350. Maybe. Or it could be all the way up here to like 600. That's where the confluence is. See those numbers lined up all blurry right there at 500? It's because there's multiple fib lines right there. That would be the extension target. But it all starts with a reversal, and we do not have that yet. So, not buying yet. And Goose keeps telling me that I told him not to buy. And he did buy and bought more. And he'll tell you about it if you ask him. AV. There's the high, there's the low. Potential to break above. And 234 is the target. Z for Zillow already did. LAUR. Potential back to the roadmap line right there. And BAC. Sitting below resistance. So resistance here. Target here. 45.92. And if we break down under the roadmap line, it may result in a move down here to this target area right there. And hood. Oh, go, baby, go. I am long shares of this. Still underwater significantly, but 27, 29, 35. This may be a measured bounce. It looks sloppy, but bear with me a second. Non-log scale. Now, some people ask me, JT, why log scale sometimes? Why not log scale sometimes? Well, you see, people code algorithms. Sometimes they use the log mode when they code their algorithms, and they use the log mode on the fibs. Sometimes they don't use the log mode. You don't know which way it is. Which way is the majority of the algorithms for a particular ticker? The only way to tell is to check it out and turn the log mode on and off. This one looks better with log mode off, but BA looked better with log mode on. This one looks like we're going possibly to 30, possibly 35, possibly 40. I hope 40 because that's where I become solvent on the trade. Actually, it's somewhere around 34, I think. Right here, probably. I've been selling calls, but it's tough to sell calls this far underwater. Been selling calls for a couple of years, and lately, the expirations out here don't have $40 calls to sell. I have 35s, and that's really close to me being barely break even, so I'm not going to sell those. Good way to lose money is to sell calls under your cost basis. So you lock in a loss when we get a pop. So there's the potential move. 35 would be the realistic target on that measured bounce right there. 2, 3, 4, 5, retrace. And this could get really spicy. Like this move could be up here and then get an extension. That's what I'm kind of banking on. But holding the shares I've got. And coin has a measured bounce in place. Rejected, breaking through the roadmap line. It's got a lot of stuff working on. A lot of stuff working against it here. Working for it and working against it. We did a big move up. A retrace, held that 50% on the non-log mode. We may come down if crypto gets a little soft. If we get a flush out in Ethereum, we may see this dip down to the 618. If we hold that, could set up the big move, the bigger move, potentially all the way up here, 445. Now, just based on the initial IPO and the retrace, we also have targets 486, 537, possibly 675, but nothing's showing we're going up yet. So it's all a hope and a dream and a prayer until we actually make a reversal and break out through resistance. FCX has done a cautionary thing. So this move, this move, that's 3 waves. All right, this move down is very similar to the copper chart. Gives me a lot of cautionary heartburn here. We may see a lower low dip down into this area right here. Be careful. Could it go bullish? Maybe. If we break down below these lows, that's your warning sign. Could possibly turn bullish, but sheesh, that's a scary bet right there. QCOM has a measured bounce in place right there, failing to break through the roadmap line. There's your upside resistance. If we fail it, probably going low, lower low maybe. Anybody still with me? 60 people still with me. I'm gonna wrap this up here in a second. WMT out to targets, needs to retrace before we can do anything. And MPC sitting on the roadmap line. Coin flip. Does it break down? Does it break out? No idea. There's low, there's the high, there's the low. Here's the resistance right there at the consolidation. As long as we're below that and below the roadmap line, downward is the direction. And the AAPL, Baba. Resistance at these prior highs right here. To have a bigger target on the upside, but there's the resistance right there. And as soon as I learn how to do the giveaway, I will do it. Sorry about that, everybody. PGR. Here's the retrace potential right down there. This books. Measured bounce potential. Target up here. 167. Big upside potential. And SVXY. Not great looking. That's what I have to say here. Healthy move up, retrace. It's going to hold here through the election, probably. Hold in here through the election. That's what we got. Bud, FSLR. We already did Bud. There's the resistance. There's the support. Already drawn, CRDO. Potential to break on out. There's the high, there's the low. Potential for 3850. SWBI. Nothing changed. Just back down. Doing it. Retrace to potential measured bounce. It has a big measured bounce and a littler measured bounce. All the measured bounce potential. Still the same target. Potential to rally up to 75. I'm still gonna. I've got whatever 1,000 shares, 2,000, 3,000 shares. I don't remember. I bought a bunch of shares over here, several thousand. I'm holding out for 75. It may take me a decade or longer to get there. MU. Golly. Resistance, resistance, support, target, support. Tesla. We have a event coming up next week, or no, 2 days. The robo event may cause a massive pop, may cause a massive drop. It says a measured bounce in place right here. Target 415. It's just the average target. Goes from 348, 350, 415, 500. That's the 3 target levels. Right there. Simple as that. Very simple chart. Not even looking at a bigger picture. NVS probably coming back to the roadmap line right there. Rolling on down, rolling on down. Google. Stuck at the roadmap line. Resistance here, support here. Well, support at the roadmap line, and then support down here. And GE. Yeah, it probably needs to retrace. Just been ripping. And MSFT. Not a fan of that. You kind of like the bubble pattern. There's the long, 41. There's the short, 361. And where was it? Cost. Cost is just up here at the sky high. Probably needs a retrace. Can't really do anything till it does. AIG. So there's the resistance. There's the target. There's the support. That's AIG. SVIX is basically the same as SVXY. Same sort of thing. Although this is not performing as well as SVXY. May get another move down. Depending on how you look at it. Could come down in here. Same as SVXY. Could go down. AAOI. So there's the high. There's the low. There's the resistance. If we break through the gap, 30 on the upside. And we love it. SMCI buy. I wouldn't touch it. I wouldn't touch it. That's just a consolidation before we go further down the toilet. Let's be honest. That was a crazy pop. Absolute insane. Hit $1,200 a share. That consolidating like this, down. We've not quite made it back to the bottom. Still have lower to go. 30, maybe even down to 20. That's what I would expect, really. That's SMCI. ALB, I talked about that quite a bit this morning. Has a roadmap line bounce off the bottom, potentially. Could poke a little through. Break back below this 86 level. Could be heading down to 67 level right there. MCD. Just remove drawings. We've just kind of gone sideways here. It's a big choppy hot mess here. That low, that high, that low. 310 target. right there for MCD. BT. There, sideways right there. That's the expectation. And awesome, Anthony. Hope you made money. Did NEM already. All right, we're down to the end of the list. Thanks for coming, everybody. I'm gonna wrap it up here. That was a long one today, hour and 45 minutes. Hope everything was good. I'll be back live first thing in the morning, 9:15, same bat time, same bat channel as always. What's popping? What's dropping? Look at the pre-market. We do have those FOMC minutes tomorrow, so be careful. I'll be back at you after we get the overnight action. Do it all over again tomorrow. Bye for now.